Right, today I want to talk about the next big story in crypto. What could capture investors' imagination? Now, the Bitcoin traded near $120,000, more than doubling over the past year, and investors are asking what will drive the next leg higher. Now, unlike earlier cycles that relied heavily on speculative hype, the environment in late 2025 is shaped by clear, measurable forces. Now, from global monetary policy to institutional adoption, from structural supply constraints to new investment access for retail, the crypto is entering a phase where catalysts are grounded in fundamentals rather than speculation. Now, there are a few things that what we want to look at, the next big story. And the first one, that is the macroeconomic tailwind. Now, global liquidity is expanding at record pace. Central banks across the world have pumped trillions into the financial systems to support fiscal deficits and softening growth. The money supply across major economies has reached new highs, while the US has posted a federal deficit exceeding $1 trillion within just 9 months. Okay, so such conditions favor scarce assets. So when governments expand money supply, currencies lose purchasing power. Investors often hedge with hard assets like gold. Bitcoin, with a capped supply of 21 million, is increasing, playing the same role as digital gold. Now, its market capitalization of around $2.3 trillion is still only a fraction of gold's 23 trillion, suggesting room to grow if it continues to gain credibility as a store of value. So as you can see from here, this is the M2 chart, and that is what we can regard as the global liquidity. And you can see that it's expanding. I brought this chart based on 2016. If you go on earlier, you can see this is just an upwards trajectory. And after a slight drop in 2022, we are seeing it increasing again. So this shows, that money supply. And if you really want to talk about inflation, the indicator for inflation, this is the indicator for inflation. You pump money in, all prices will rise. Okay, so it is what it is. And just to let you know, next time if they say inflation is coming down, the real inflation, we're calling about the true inflation, not the data that is they're just simply throwing at you, that you just look at numbers and say, hey, inflation is dropping, but do you actually see the price of the goods that you buy on a daily basis? Do they really drop? Right? So the low interest rates also support crypto. Even as central banks cut policy rates, inflation remains sticky, meaning real yields trend lower. Historically, this mix of loose money and weak real returns has boosted demand for alternative assets. Okay, and the second thing, the next big story, I would say, is the institutional adoption. Now, the biggest change in 2025 has been the opening of mainstream channels for institutional money. Spot Bitcoin exchange traded funds approved in the US has attracted over $100 billion within months. Now, one of the most significant new development came in August 2025, this month, when the US government formally allowed cryptocurrencies to be included in 401k retirement accounts. For the first time, American workers can allocate part of their long-term savings into assets like Bitcoin and Ethereum alongside stocks and bonds. This change instantly expands the pool of capital that can flow into crypto, since 401k plans represent trillions of dollars in household retirement wealth, right? Asset managers like BlackRock and Fidelity are expected to design retirement-friendly crypto investment products in the coming months, creating a pipeline of capital that is patient, regulated, and sticky. This August policy shift could prove to be a turning point in institutional adoption, embedding crypto directly into the structure of US household savings. The next, I would say, the catalyst would be retail inflows after the institutional adoption. Now, despite strong performance, retail participation remains muted. During past bull markets, retail investors often drove parabolic price surges. Now, this time, app downloaded data shows crypto trading platforms like Coinbase and Robinhood are not topping charts. Social media mentions and Google search interests are well below levels seen at previous peaks. Now, this lack of participation suggests untapped demand. Bitcoin has outperformed the S&P 500 fivefold in the past year, yet mainstream enthusiasm has not fully returned. So if headlines about new all-time highs or corporate adoption capture public attention, retail inflows could accelerate. With ETFs and fintech apps lowering barriers, it is easier than ever for individuals to buy crypto. A surge of retail participation layered on top of institutional foundation could drive the next explosive move. Okay, so beware of that. They are not in yet, no matter what the mainstream they are talking about, Now, next in under my radar is the SEC's new listing rules for spot crypto ETFs. Now, recently, the US Securities and Exchange Commission, better known as the SEC, approved new generic listing standards for commodity-based ETFs that include digital assets. Now, this particular change streamlines how exchanges like NYC, ARCA, the NASDAQ, and CBOE can bring crypto ETFs to market, removing the need for lengthy case-by-case SEC reviews. What took many months can now be done in a fraction of time, dramatically reducing barriers to launching new crypto investment products. Now, under the new rules, crypto ETFs no longer need to go through long one-by-one approvals, as long as they meet basic requirements like having futures already traded on regulated markets or strong oversight for trading activity. They can be listed much faster. And now this system has already been used to approve Grayscale's digital large cap fund, which holds Bitcoin, Ethereum, Solana, and Ripple. Now it means investors can now expect ETFs for multiple coins, not just Bitcoin and Ethereum, to come to the market more quickly and smoothly. Now this change matters because big investors such as pension funds and asset managers usually prefer regulated products. With easier approval, more ETFs can launch on mainstream exchanges, giving institutions safer ways to invest in crypto. For everyday investors, it also means more options and easier access through regular brokerage accounts instead of having to use crypto exchanges. So as a conclusion, Bitcoin is steadily moving towards being treated as a reserve asset, while Ethereum is becoming a yield-bearing deflationary currency underpinning decentralized finance. Now together, they anchor a digital asset market that is more mature, more integrated with traditional finance and supported by clear structural catalysts. Alongside them, other leading cryptocurrencies are also carving out distinct roles. Now, stablecoins are increasingly regulated and embedded in mainstream finances, serving as digital cash rails that bridge traditional markets and crypto ecosystems. So even tokens tied to real-world asset tokenization are beginning to demonstrate how blockchain can modernize capital markets. So if these forces continue to align, the next leg higher for cryptocurrencies in late 2025 could mark not just another bull run, but the beginning of their establishment as permanent fixtures of the global financial system. Okay, so hopefully that clears up a lot of things on the catalyst. So what's left to do right now is just wait for it to come to fruition. With that, that's the fundamental report for today.